This is Nick Radge, manager of the Harbourside Capital Multi-Strategy Wholesale Investment Program. And today we're going to talk about our performance for the month of November 2024. We had a very good month, in fact, an outstanding month, up 19.03% for the month, which takes our year to date 56.68% after fees. And that bodes well against the benchmark Russell 1000 total return, which year to date has returned 28%. So since inception, our performance has been 22.9%. So pretty good month. We'll talk about that very, very shortly. Obviously, during the month of November, we had the election in the US. Now that kicked the Australian market a little bit higher, and it continued to contribute very, very nicely to our performance, which, as I've said in the last 18 months, has been pretty lacking, but it's good to see it's now starting to kick along very, very nicely, and hopefully that tailwind will continue. Rate cuts, very unlikely, even as inflation eases. The trend does remain up, and we will remain in the Australian market for December. So the US, all eyes were on the election, and we did get a Trump kick higher in the equities market. And that is probably, dare I say, and make the prediction, but it's probably going to continue for maybe up to 2 years. I don't think the bigger picture beyond 2 years is very, very rosy at all, but we'll take whatever comes. And as we've always said, should the trend turn lower, we do have the mandate to go to cash. So whilst it's higher and whilst it's strong, we will remain with it. The election obviously increased the volatility. There's still a little bit of that going around at the moment. Earnings are still coming through, a bit mixed, but all in all, the earnings for the S&P 500 continues to rise, and that should support equity prices going forward. Gold did ease during the election or after the election, but Bitcoin really took off, and it almost hit $100,000. It's pulled back a little bit now, but for all intents and purposes, it's going to really continue to move up very, very nicely. Let's take a look at the winners and losers for the month of November. In Australia, Catapult gained 40.5%, which was a great contributor to the bottom line. HMC Capital continued to increase, up 21% for the month of November. It was up 24% during October. GQG Partners, which was quite a contributor during October, gave back 15.8%. It got caught up. Apparently, it's quite heavily invested in Adani, and Adani has come under scrutiny by the SEC in the US. So quite a bit of a sell-off, and we will be removing that position at the end of November, going into December. In the US, well, the big one, the real kicker for the portfolio, and it only really takes one, was AppLoving. Again, up 98.8% during the month. Now, that's on the back of a 29% gain last month and a 40% gain in September. So that stock has really ripped higher. Also helping out in the US, Natera up 38.7% and Spotify up 24.05%. I guess it's this stage I should point out what our strategy is trying to do and has successfully done in the last few months. It attempts to identify and capture the what we call right tail outliers, and these are stocks that exhibit exceptionally upward momentum, and they continue to do that. Momentum begets momentum. Now, what happens here is these outliers create what we call a mathematical skew, and this is where simply the average gain from winning trades significantly outweighs the average loss from losing trades. Consequently, what that does, we shift the emphasis away from being right or wrong, i.e. we have no predictive power, we're not trying to predict anything, and we move away from that right or wrong on individual trades, and our overall success really depends on capturing these big, impactful performers. Now, the problem is these don't come along every single year, but they do come along often enough to create these outsized returns that we're seeing this year. If we go back to 2020, for example, the standout was Tesla. I think we purchased that at about $40 and sold it for somewhere in excess of $300. In 2021, it was Moderna. That said, in 2022, there were no outliers. It was a bit of a bear market anomaly, and as a result, we had quite subpar performance. In 2023, the real outlier was Nvidia, but the strategy really failed to connect with that a great deal. We did get on once or twice, but really didn't ride it for everything it's worth. So fortunately, this month, the portfolio has benefited from capturing multiple outliers, if you like. And obviously, the most notable one is that Apple having APP up 98.8%. Now, I have no idea where it's going to go from here. No one does, but it's got very strong earnings driving it at the moment. And as usual, if the trend changes, we will actually cut that position. Saying that, we did actually have to trim a little bit of position during the month because it became such a large portion of our overall portfolio that it was too much of a risk to ride the whole lot. So we also benefit from the Australian stocks this month, as I said, which has been a development that's been long overdue. So that's great. And we'll make some minor adjustments to the portfolio going forward into December, but we will remain fully invested. As usual, if you've got any questions, feel free to drop me an email. Happy to answer those for you.